NIO is trending again as investors react to a wave of operational milestones and renewed institutional interest. During the Chinese New Year holiday, the company reported multiple record breaking daily battery swaps, signaling exceptionally strong utilization of its growing swap station network. For bulls, this isn't just a headline metric, it's proof that NIO's Battery as a Service, or BaaS, model is scaling in real time. Supporters argue that the surge in daily swaps demonstrates rising ecosystem stickiness, recurring revenue potential, and expanding infrastructure leverage. They view BaaS as a long term competitive moat, especially as more drivers opt for flexible battery subscriptions rather than outright ownership. Combined with the recent commentary about improving margins and adjusted operating profit momentum, optimism around NIO's path towards sustainable earnings continues to build. Adding fuel to the narrative, prominent institutional investor D.E. Shaw and Co. significantly increased its stake, which many interpret as a vote of confidence from smart money. Institutional accumulation tends to shift sentiment quickly, especially in heavily debated names like NIO. Macro developments are also shaping the conversation. Following a Supreme Court decision striking down certain tariffs, some traders are speculating that reduced trade friction could improve sentiment toward US listed Chinese equities, potentially benefiting EV names broadly. The ripple effect narrative is gaining traction, especially among those who believe geopolitical risk has been suppressing valuations. Yet, despite the operational wins, the community remains sharply divided. Bulls point to record battery swap utilization, institutional buying, improving margins and adjusted operating profit momentum, growing confidence in eventual full year profitability. Bears and skeptics counter with concerns about the long term capital intensity of maintaining and expanding the swap network, questions around sustainable free cash flow, ongoing fears of price wars in China's ultra competitive EV sector. A particularly heated focal point is the $5 price level. Traders are closely watching this psychological threshold, celebrating each breach above it while expressing frustration when the stock retraces. Many retail investors openly accuse market makers and algorithmic trading strategies of pinning the stock around options expiration levels, especially near the $5 strike. Talk of a potential mega squeeze is growing louder if the stock can hold and build above that range. The emotional tone in forums reflects a mix of conviction and exasperation. On one side, investors see a company hitting operational records, attracting institutional capital, and edging toward profitability. On the other, they feel the share price doesn't reflect those fundamentals, fueling accusations of manipulation and suppression. Overall, NIO's narrative is evolving from survival mode to execution mode. The coming weeks could prove pivotal. If operational momentum continues and profitability materializes as projected, the debate may shift from can NIO survive to how quickly can it re rate. And that's exactly why traders are watching so closely.
So the stock gained 2.84% in the regular session of yesterday, the 20th of February 2026. Volume was 34 million shares. We don't exactly know what the 50-day average is. Okay, let's see what we have here. The stock has been consolidating within a longer term bullish trend. Yes, longer term bullish trend. It's 200-day moving average, this one, which is sloping bullishly upwards. Yeah. It underscores its underlying trend. So this consolidation began all the way back in early January. So the whole of this year has just been consolidating and all below, just with slightly below within $5 level. So any talk of manipulation, it's hard. It will be very hard to argue against that. See above, you can see a video we have as regards market manipulation and fake shares, synthetic shares, and all that. So look above, you see a video on that. So the extrapolation seems to be suggesting that this trend it picked up yesterday. As a matter of fact, it was actually from Thursday. So this was the second straight session of gains. So the extrapolation seems the algo seems to be suggesting that it might maintain it up till at least the 17th of March with a lot of volatility. Okay. The tariff headwinds, tailwinds, tariff Supreme Court ruling, U.S. Supreme Court ruling on tariffs it is being viewed as a tailwind, but at the same time, the U.S. administration is not giving up on tariffs or levies or stuff like that. It's not giving up. Moreover, as well, the tariffs has also even resulted in more onshoring of manufacturing in the U.S., which is actually a bigger deal than the revenue that comes into the U.S. Treasury. So we'll see. But the algos for now has now read the tariffs, amongst other things, as a positive, and may result in a re-rating. May result in the stock advancing towards or breaking the resistance at $5 and slightly higher. So the projections here are saying as of now 2.94, 3.27, 3.81, 5.32, 5.68, 5.90. Okay, so as I indicated earlier on, we've had a look at the moving averages, the price pressure momentums. They are all extrapolating volatility from the 10-day moving average all the way to the 200-day moving average. Between now and early April, it's not going to be stable. It's going to be volatile. Let's have a look at the weekly chart and see what we have there. Okay, so I said it's not going to be. It may not be volatile. So the algos are sensing volatility. Not that it will not be. I can't tell you for sure that it will not be. So we don't have anything here with regard to extrapolations. It seems NIO hasn't been around that long, so there are no extrapolations on this on the weekly chart. So we can also have a look here while we're here. A look at the market grid on its weekly chart. It might give us a range of possible prices. Okay, let's see here. Okay, it has a range of between 5.51 and 4.39, and it's currently at 5.07, 5.07. So it's just neutral between the resistance and the support. So lower prices still very much possible. High prices also very much possible. Okay, let's see. Let's return to the daily chart to see whether we have what the market grid is going to give us here. Here, it's pretty much the same thing as well between 5.06 and 4.806. 4.06 and 4.80. Those are the possible prices based on what has transpired of late. Okay, so yeah, that's what's going on right now. We'll definitely continue to update you. We've also had a look the probability of it retesting this rejection here at 5.13 is statistically less than 50%, but there's still something there. There's still something there. Regardless of the probability being less than 50%, there's still some probability there that it might be able to do so. But surely, I think some market manipulation may be there without any doubt. Manipulation affects every stock, so it's not the stuff of manipulation is not a stock of not a stuff of conspiracy theorists. No, it is the fact. It is the fact. It is reality. Especially if a stock, regardless of whether it's optionable or not, there's manipulation there. If it's not optionable, there are other ways they can do asymmetric trading, other synthetic trading, and all of that. So as I pointed out earlier on, you can see there's a video about synthetic shares and on all that synthetic trading, and let's see how all of this will affect a new stock. And thank you very much for watching this video.